credit card is a plastic card that you receive from the bank's credit card department. So it means that you go to the bank and you say that you want a credit card account so that they will allow you to buy things on credit. So they grant you the credit and you have 59 days to repay the credit to the bank. If you don't pay it, then you have to pay interest on it. The credit card department will decide, according to the Credit Act in South Africa, what the monthly amount is that you're allowed to buy on credit and what is the minimum that you can pay back. So credit card, basically, you don't have to pay back the full amount that you bought in that month. You can take 3 or 4 months to pay it back, but if you take longer, then it means that you pay interest. All the money that you pay or withdraw from your credit card is owed to the bank. So you can use your credit card to make payments, and you can use your credit card to withdraw money from the bank, but every time you use this credit card, it means the debt to the bank increases. A credit card is normally used for payments. At the end of the month, the credit card department will send you an account of how much you owe and what was all your credit purchases and what was all the payments and how much you have to pay at the end of the month. When you buy goods on a credit card, it means that I can swipe my credit card to pay for expenses or to buy goods. But if I do that, the business will not record it in the cash payments journal because you are not taking money out of your normal bank account. You owe the money to the bank. So later when you pay for the goods, you will show the payment in your cash payments journal, but not when you buy the goods. Sales using a credit card. Now, if your customer wants to pay with a credit card, they can, because the bank will pay the money to the business immediately that same day. So the client, although they buy from the business on credit, they don't owe the money to the business. They owe the money to the credit card section of the bank. So if when he swipes the card, it means that we can show it as cash sales because the bank will pay the money into the bank account of the business the same day. Credit card sales are recorded in the bank column and sales column. So very important, when you use a debit card or a credit card, the people pay their sales debit card or credit card, it means that you don't show it in the analysis of receipts column because you didn't receive the cash in the business and then paid it over to the bank. So if we look here, say for instance they say that the person made a direct deposit or paid with an EFT or paid with a debit card or a credit card. You didn't receive money in the bank, so you're in your till. The analysis of receipts is like a till. You will show it immediately in the bank because the bank will transfer the money to your bank account. You don't have to take the money, complete the deposit slip and put it into the bank. If you have cash sales or you issue a receipt to someone that pays you cash, it means that you have to take this cash and you must put it into the bank. And that means you will first put in an analysis of receipts, transfer it to the bank, and you will show that that was the sales. So at the end of the month, the cash receipts journal and cash payments journals compared with the bank statement to determine if any mistakes or omissions were made. So if you put the wrong figure in your bank column, you will not be able to tick it off against your bank statement to see whether the entry was already recorded or not. So if you receive money on the same day, 10,000, that was a direct deposit, 4,000 cash, you will have to record it as 2 entries in the bank column because it will be 2 different deposits that was made into the bank. So very important, if someone pays you with a debit card, a credit card, EFT, direct deposit, it means nothing appears in the analysis because the money is transferred immediately to the bank.